going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Space. Here we are at the end of March, and I guess I just kind of want to kick off this conversation by talking about all of the action that we've seen in the price of Bitcoin, down 12% year to date, but obviously it had ripped up much higher in the latter half of the year in 2021. Just kind of curious about what you're thinking about the Bitcoin price action so far in 2022.
Sure. So Bitcoin goes in some pretty wild cycles. Over the last 9 years that I've been investing in it, it's had 6 bear markets that averaged about 60%. This one's been 50%. And I think that as institutions engage the space, all of those cycles will moderate, thankfully. And so I think a 50% bear market's probably all you're going to get going forward. So I think we're either at the lows or very close to it. And another thing we've seen historically is when there's been a massive rally, like in 2013, 2017, in the last 2 years, the market typically peaks right around January 1st and kind of drifts down into tax day, as many investors who are limit long crypto have to sell some crypto to pay their taxes. And then after that, the market can kind of get going. And then I would say the third thing that's definitely impacted it is, although Bitcoin and cryptocurrencies generally have a very low correlation to asset classes over long periods of time, in very stressed periods where the S&P as a proxy for risk is down quite a bit, there have been 6 of those since Bitcoin started trading. And the average is for 72 days, correlation goes very high. And then over time, it then breaks down. And all those things combined make me actually wildly bullish right now. I think that the markets will decouple. I think stocks and bonds may keep going down potentially for years, whereas blockchain assets can go up.
Into kind of where you could see the price action going in the future. But I mean, just to kind of keep thematically to looking back on what happened so far, I mean, you noted in February that you didn't predict that such a savage downturn, I think is the language that you used, was going to happen in crypto. And I understand that the tax implications, that's maybe something you had expected, but it seems like the asset correlation bit that you were describing in the latter part, maybe what was the surprise there. Is that a good reading of kind of what you saw in the first 3 months so far?
It is, because I think the big macro theme here is the Fed's massively behind the curve and is going to have to raise rates much more than anyone has been talking about. And so in our December 7th investor letter, we said it was a Ponzi scheme. The bond market had been manipulated by the Fed. They'd driven the value of bonds $15 trillion above their 50-year real rate pricing, and that would pop soon, and it did. Bonds have gone up 100 basis points in yield since we predicted that. What we didn't predict is that would have a very negative impact on blockchain. And so when you're trading and something goes against you, you're either wrong or early. And I think in this case, the markets have it wrong, and that blockchain will decouple from the other asset classes. And if you think about it, with rates rising, that is mathematically negative for bonds. It also has a negative impact for anything else with discounted cash flows like equities or real estate. But blockchain is totally independent of rates. So I can see us, 6 months from now, where the other asset markets are still struggling and blockchain's, back off to its typical 2.5x a year growth that it's been doing for 11.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And guys, right now we have cryptos pumping. We have CME opening. Don't forget the new project they launched. But also, guys, do not pay attention to the hype, guys. We are definitely in a bear market, as Dan is going to state. The fact is that the Fed is going to start raising rates at a rapid pace, which is going to shrink liquidity. If you understand finances, you know. We know who's pumping us. All this big casino. This is where the money is coming from. I show you this. But yes, are we still going to have pumps and dumps around the same time? Yes. We've been doing it since I've had this channel, and we've made plenty of money. But it is time for the Fed to start building this fourth industrial revolution. So while they're choking this economy, they're going to be running in automation. The same way when the C word came, they laid down all the foundation for the technology. Now it's time to build on that foundation. And remember, the crypto teacher told you, do not get greedy in this phase. Right now, this environment that we're in right now is for traders. You're going to get a better entry point if you're just an investor. Not your financial advisor, not financial advice. Please do your own research. But Dan Moorhead states in this video from Pantera Capital that he thinks about a year from now we're looking at 5% interest rates. But you can't look at the economy just as America. This is global. Bank of England raising. By then, the ECB raising. By then, the Bank of Japan is going to be raising. Guys, this is a global economy. You cannot just look at America the way we used to. This is global. Crypto is global. But yes, once they start building the fourth industrial revolution, then they're going to start adding in blockchain, these robots, these algorithms, and then we're going to start seeing all the money flow in there. But guys, that's going to take time. They have to start shrinking so they can start pulling this money out so they can build. And that's when we'll start to see over 18,000 cryptos start to shrink. We know the New World Order is going to pick the winners and losers. And remember, the crypto teacher told you because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
2.5x on average for 11 years. And sometimes it gets ahead of itself and has a bubble, and sometimes it's in a bear market like it is now. And we're right now actually 60% below that 11-year trend regression. So our normal forecast is that a year from now, we're going to be 2.5x higher. That puts you at about 100,000 per Bitcoin. And although that number sounds crazy, I think it's pretty likely to happen.
Yeah, you're not the only one in the crypto space and seeing such close coverage of the Federal Reserve, because it seemed like that was something that only the Wall Street Journal or the old guard would do. But obviously that remains a massive story for crypto and risk asset classes at large. What are you seeing on that front now that the Fed has pivoted to this stance of, look, we got to get on inflation. We're raising rates. They already did that last week, and it sounds like a lot more in terms of tightening is expected to come this year and next.
Yeah, so that is an interesting question. The first 2 years of this policy regime were very easy. The Fed and the Congress were printing $9 trillion of new pieces of paper money, and that had to mean that it would take more pieces of paper money to buy the same things, whether those things are ounces of gold, shares in the S&P 500, median homes, cup of coffee, or crypto prices. So that bit was very clear. If they're going to print all this paper money, it was going to drive up the price of hard assets. And, really the inverse of that would drive down the price of paper money. This is a new policy regime where all that money's still out there. So the quantity of money is still the same. There's still the extra $9 trillion sloshing around. The only difference is the Fed's raising rates on overnight borrowing, and that ultimately will make bonds go up on higher yield. Again, that's totally connected to the price of bonds, but it isn't really connected to the price of Bitcoin or the price of other blockchain assets. So I can see a world in a year's time where the Fed has rates at 5%, which is double what anyone else is talking about these days. But that has a big impact on the standard risk assets. But hey, Bitcoin's gone up 147% a year, 5% higher funding costs. I just don't think it's going to dissuade people. So if you have an asset that goes up 147% a year, and rates go from 0 to 5, obviously has some slight negative impact, but it's very small relative to the returns people have gotten historically in Bitcoin.
The major thesis that you had was effectively shorting bonds and shorting mortgage-backed securities, the two major assets that the Fed loaded up in the magnitude of trillions, as you described, with their $9 trillion balance sheet. Now, how does that relate to the crypto thesis? Are they completely unrelated, or are they tied together?
Well, I think they are related in the sense that institutional investors are always looking for places to invest their capital that are going to have, high returns and low correlations. And if they come to share my view that interest rates are going to go up 20x in overnight rates and 3x in the 10-year note, that's really a terrible place to be invested. And if that happens, it's probably going to be tough for stocks, and it's probably going to be tough for real estate. And so they're going to be looking for assets that are uncorrelated to interest rates. And blockchain, I think, is a good place to look. And the important point is, blockchain is a $2 or $3 trillion asset class. So as these institutions are looking for things they can invest in, it's not a niche thing, like fine art or something like that. And they can really put huge amounts of money to work. And we're seeing that in our own funds, that the institutional appetite for investing in blockchain funds right now is so much higher than it was even, say, 12 months ago.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Tam save the village. Part 2. King Joshua and Drama Tam save New York from COVID stories 3. Part 3. King Joshua and Drama Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.